Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape is buzzing with dynamic movements and pivotal developments. Starting with market performance, Bitcoin has demonstrated remarkable resilience by climbing back above the $118,000 threshold following a minor dip, signaling continued bullish sentiment among institutional investors. This rebound underscores the asset's strength amid broader market fluctuations and sets a foundation for potential upward momentum if key resistance levels are breached. Altcoins, however, painted a mixed picture during this period. Solana emerged as a standout performer, briefly touching $200 for the first time since March, propelled by Jito Labs' unveiling of the block assembly marketplace. This innovation aims to enhance transaction speed and network efficiency while combating exploitative practices like front-running, reigniting investor confidence in Solana's technological edge. Despite this surge, other altcoins like Ethereum, XRP, and Dogecoin experienced slight declines as traders recalibrated positions ahead of Federal Reserve Chair Jerome Powell's scheduled speech, which could influence short-term market liquidity. Institutional activity is reshaping market dynamics profoundly. Ethereum exchange-traded funds, ETFs, recorded a staggering $296 million in inflows, marking their 12th consecutive day of gains. This momentum starkly contrasts with Bitcoin ETFs, which saw $131 million in outflows, ending a 12-day winning streak. Analysts interpret this shift as a rotation play, where capital flows from Bitcoin into Ethereum and other major altcoins in search of higher growth potential amid Bitcoin's recent price appreciation. Such institutional preferences could accelerate Ethereum's adoption in decentralized finance, DeFi, and strengthen its position as a core portfolio asset. On the corporate front, Trump Media and Technology Group announced a monumental $2 billion Bitcoin purchase, challenging traditional halving cycle narratives that predict a 2025 market peak. This move, possibly signaling bet on macroeconomic shifts like Federal Reserve rate cuts, could inject long-term bullishness into Bitcoin's valuation by aligning it with pro-crypto political tailwinds. Similarly, SpaceX reactivated a dormant wallet to transfer $153 million worth of Bitcoin, its first such move since 2022, highlighting sustained corporate treasury interest in digital assets as inflation hedges, with SpaceX still holding nearly $815 million in Bitcoin. This activity reinforces the narrative of cryptocurrencies as viable reserves for tech giants. Regulatory advancements are forging new pathways for blockchain integration. The White House is set to release its first comprehensive crypto policy report today, derived from Executive Order 14178. This document will outline a unified federal framework for digital assets, addressing stablecoin oversight, consumer protections, and interagency coordination. The recommendations could streamline compliance while fostering innovation, though their impact hinges on legislative adoption. Meanwhile, the U.S. Securities and Exchange Commission, SEC, convened with industry leaders to explore the ERC 3643 token standard for compliant securities issuance. The meeting, described as collaborative, reflects a regulatory openness to blockchain-based solutions for identity verification and asset control. If formalized, such standards could bridge traditional finance with on-chain markets, accelerating institutional tokenization of real-world assets. Across the Atlantic, UK-based Archax announced its acquisition of Deutsche Digital Assets, a German crypto manager with BaFin licensing. This strategic expansion into European markets, combining $70 million in assets under management, could catalyze broader cryptocurrency exchange-traded product, ETP, adoption in regulated jurisdictions, enhancing market accessibility. Technological innovations are driving sector-specific evolution. Moody's ratings highlighted blockchain's potential to revolutionize covered bonds, debt instruments backed by mortgage portfolios. Smart contracts could automate asset substitution and improve transparency in issuance, though adoption faces legal and technical hurdles like off-chain settlement dependencies. For blockchain to gain traction here, jurisdictions will need harmonized regulatory frameworks compatible with legacy systems. In the space tech arena, China successfully launched the Tian Star Era 16 satellite, equipped with an on-orbit blockchain system for remote sensing data. This milestone enables applications in agriculture, mineral exploration, and environmental monitoring, potentially establishing blockchain as a tool for high-resolution Earth observation and expanding the technology's utility beyond finance. Social impact initiatives are leveraging blockchain for global good. The NFT project OWhale launched its originals collection on OpenSea, dedicating 33% of proceeds to ocean conservation NGOs. Beyond philanthropy, each NFT grants utility within the Ocean Legends Telegram ecosystem, blending digital ownership with real-world environmental advocacy. Such models could inspire similar projects to merge Web3 innovations with humanitarian causes, fostering community-driven sustainability efforts. Market sentiment indicators reveal nuanced trader expectations. Lastnode's analysis detected early signs of Bitcoin seller exhaustion, with unrealized profits cooling but remaining in euphoric territory. A liquidity buildup around $115,000 suggests this level as critical support. A sustained hold could pave the way for renewed gains, whereas a dip might extend consolidation. Altcoin-specific data from Q2 shows spot trading volumes on centralized exchanges dropping 22% despite Bitcoin's rally, signaling reduced retail participation. Derivatives markets proved more resilient, dipping only 3.6% as traders favored hedging strategies amid economic uncertainty. This divergence implies that while institutional capital dominates current inflows, broader market recovery may require renewed retail engagement. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.